What if I told you that one of the biggest economic shifts of the 21st century wasn't about oil or tech or even the dollar, but about silver? And what if the West was warned years ago, clearly and publicly, but almost no one paid attention? This isn't a conspiracy story. It's a story about patterns, power, and a quiet strategy that may already be reshaping the global financial system. And at the center of it all was one economist who tried to connect the dots before anyone else did. Welcome to the Monetary Shift. If you care about where money, power, and global strategy are headed, make sure you like this video and subscribe within the next minute, because what you're about to hear might completely change how you see China, precious metals, and the future of the dollar. A few years ago, while most Western analysts were focused on trade wars, tariffs, and manufacturing jobs, this economist was studying something far less dramatic, but far more important. He noticed a steady pattern. China wasn't just buying commodities. It wasn't just building infrastructure. It wasn't just expanding its military. It was quietly increasing its exposure to precious metals, especially silver. Now, gold usually gets all the attention. Central banks buy gold. Headlines talk about gold reserves. Investors panic and run to gold. But silver? Silver is different. Silver is both money and industry. It's used in solar panels, electronics, electric vehicles, medical equipment, and advanced military technology. It's the bridge between finance and the physical world. The economist warned that if China understood silver's dual power better than the West, it could gain leverage in two directions at once. First, industrial dominance. Second, monetary influence. Let's rewind for a moment. For decades, the US dollar has dominated global trade. Countries hold dollars in reserve. Oil is priced in dollars. International debt is settled in dollars. This gives the United States enormous influence. Sanctions work because the dollar works. But that system depends on trust and alternatives. If no serious alternative exists, the dollar remains king. But what if the alternative isn't a new currency right away? What if it's a new foundation? This economist pointed out that China had been investing heavily in solar production. Today, China controls the majority of global solar panel manufacturing. And what is one of the most critical components in solar panels? Silver. Every expansion in green energy quietly increases silver demand. At the same time, China has been expanding its electric vehicle industry. EVs use more silver than traditional cars. Then there's 5G infrastructure, semiconductors, high-tech manufacturing, all silver-intensive sectors. While Western investors were chasing tech stocks and short-term gains, China was positioning itself in industries that physically consume silver at scale. But here's where the strategy becomes even more interesting. China is one of the largest silver producers in the world. It's also one of the largest importers. That means it controls supply channels while increasing demand internally. The economist argued that this wasn't random. It looked coordinated. Control supply, control demand, influence price. And when you influence price, you influence markets. Think about it. If silver becomes more critical to global technology and renewable energy, and one country has strategic influence over production and industrial usage, that country gains leverage, not loudly, not overnight, but gradually. The West, on the other hand, largely treats silver as just another commodity. Many mines are underfunded. Environmental regulations slow expansion. Investment focus leans heavily toward digital assets and financial derivatives rather than physical resources. The economist warned that this gap in thinking could become dangerous. He explained it like this: empires don't fall because of one event. They weaken when they ignore foundational assets. In the past, it was land, food, energy. Today, it may be strategic materials. And silver is unique because it touches both economic stability and technological dominance. Now, let's talk about monetary strategy. China has also been slowly diversifying away from US Treasury holdings. While still holding large amounts, it has reduced exposure compared to peak years. At the same time, it has promoted yuan-based trade agreements and alternative payment systems. What happens if, in the future, China backs portions of trade agreements with commodity guarantees instead of pure currency trust? What if silver and other metals become settlement anchors in regional trade blocs? The economist suggested that while gold is the traditional reserve metal, silver's industrial demand could give it strategic pricing power in a world shifting toward electrification and green infrastructure. If the price of silver rises significantly due to structural shortages, and China sits at the center of production and industrial usage, it gains economic gravity. Gravity pulls capital. Capital builds influence. Influence shapes policy. Now imagine a scenario where global silver supply tightens, solar expansion accelerates, EV adoption rises. Western nations scramble to secure supply chains. Prices spike. Investment funds rush in late. Who benefits first? The country that prepared early. The economist's warning wasn't dramatic. It wasn't alarmist. It was simple. Watch the metals that power the next industrial era. Watch who controls them. For years, that message was mostly ignored. Headlines focused on political tension, Social media debated trade tweets. But supply chains quietly shifted. And here's something else he emphasized. Silver markets are relatively small compared to gold or oil. That means it takes less capital to move them, less capital to create shortages, less capital to create volatility. In a highly leveraged global financial system, volatility can trigger larger consequences. Now let's connect this to the average American viewer. If silver becomes structurally scarce, the cost of technology could rise. Energy transition costs could increase. Inflation pressure could build in unexpected places. Manufacturing margins could shrink. And if the U.S. doesn't prioritize domestic resource strategy, it could find itself dependent on geopolitical rivals for critical materials. That's not just an investment story. That's a national security story. But here's the deeper layer. China doesn't need to announce a silver strategy. Strategic advantage often works best when it's quiet. When the West debates quarterly earnings, the long game continues. The Economist's core message was about time horizon. Western markets think in quarters. Chinese planning often thinks in decades. When you align industrial policy, resource control, and currency diversification over decades, you build structural leverage, and leverage is power. Now, this doesn't mean the dollar collapses tomorrow. It doesn't mean silver replaces gold overnight. It doesn't mean China controls everything. It means the game board is shifting. The monetary shift is about recognizing those shifts before they become headlines. The Economist also warned investors about complacency. When markets are stable, people assume stability is permanent. But history shows that monetary systems evolve slowly, and then suddenly. Silver, because of its industrial role, could become one of those sudden catalysts if demand outpaces supply. Consider this. Global silver mining growth has not kept pace with projected industrial demand. Many primary silver mines are aging. New discoveries are limited. Meanwhile, renewable energy targets keep rising. If governments accelerate green mandates while supply lags, pressure builds. And pressure in commodity markets eventually shows up in prices. Now imagine that scenario layered on top of geopolitical tension. Sanctions, trade restrictions, export controls. Suddenly, metals are no longer just commodities. They're strategic tools. The Economist's warning was less about panic and more about awareness. He believed the West needed a coordinated resource strategy, not just financial innovation. Because in the end, digital wealth still depends on physical infrastructure. Servers require metals, batteries require metals, grids require metals. You can't code your way out of material shortages. So what should viewers take from this? First, understand that global power isn't just about GDP numbers. It's about supply chains. Second, pay attention to what countries invest in quietly, not just what they announce loudly. Third, recognize that precious metals aren't just old money. In the case of silver, it may be future infrastructure. The Economist didn't claim certainty. He offered a lens, and that lens shows China positioning itself at the intersection of industrial growth and strategic materials. Whether that becomes decisive depends on how the West responds. Will the U.S. expand domestic mining? Will it secure partnerships in friendly nations? Will it treat silver and other critical minerals as strategic assets instead of afterthoughts? Or will it continue assuming markets will self-correct? History suggests that strategic planning beats reactive policy. As we move deeper into the electrification era, every solar farm, every EV battery, every data center adds incremental demand. Incremental demand becomes structural demand. Structural demand changes pricing power. And pricing power shifts influence. That's the chain reaction The Economist warned about. This isn't about fear. It's about understanding how long-term strategies reshape global finance. If you've made it this far, you're already thinking differently than most investors. And that's exactly why conversations like this matter. Before we wrap up, I want to hear from you. Do you think silver could become a strategic leverage tool in the next decade? Or is this overblown? Drop your thoughts in the comments. Real discussion builds real awareness. And if you found this breakdown valuable, share it with someone who follows global economics or invests in commodities. These conversations need to happen more often. This is the Monetary Shift, where we track the silent moves shaping tomorrow's financial world. Stay informed, stay curious, and remember, sometimes the most powerful strategies are the ones no one is talking about.